and people are starting to realise it's fundamental.
But I do worry that if we don't manage expectations on timing of delivery of these metals, that the sector is going to have a challenge on its hands.
Fossil fuels are not going to be phased out overnight, and the economies that believe that that is the case do so at their own peril.
And I'm not sure why Hayden pointed at me when he said tailings dam failure.
Because you said to me earlier. Well, to reference something that CK would give me on a golf course, it's loft. Lack of effing talent. But no, seriously, talent in the mining industry and getting new young people into the industry is really hard. You know, there's been a long period of time that people haven't wanted to work in mining. I think it's turned a corner a little bit recently. I feel like it's no longer the dirty word it was 5 or 10 years ago, and people are starting to realise it's fundamental. I like the fact that we've changed it from mining to critical minerals. So yeah, I think that's the biggest challenge that I face, is getting young people to come into the business.
Like, I think it's a fabulously exciting time in the mining sector. I can't recall any point in my career where on the daily you're seeing references to mining on Bloomberg. I mean, you're used to seeing it in the industry-focused media, but when you see it in the mainstream media day in and day out, it's super exciting. But it also concerns me as well, because I think their expectations are mounting around timing, around some of these projects. And I think those of us who've been in the industry for the length of our careers know that Rome wasn't built overnight, and it takes time to go through the motions of resource discovery, permitting, construction, and actually delivering these metals.
It's getting worse as well.
And you've got stakeholder governments, you've got investing governments now, you've got investors who are coming into the space for the first time, and there's a lot of excitement, but I do worry that if we don't manage expectations on timing of delivery of these metals, that the sector is going to have a challenge on its hands.
So CK, you mentioned the mining industry is now on Bloomberg Radio. Is it the mining industry, or is it gold and copper? Do generalist investors still actually know the first thing about mining, or give a shit?
A few questions in there.
Yep.
I think what I'm seeing is a lot of talk about critical minerals. I think people have different definitions of what are critical minerals. At the end of the day, when you actually zoom out and what is driving the global economy, industrialization, AI, in terms of electrification, copper is the beating heart of industry. And so you've got great projects coming up like Marimaca. I think there is a lot of talk about rare earths, and the like, and I think they're important, but they're pretty small industries actually when you zoom out and look at, in revenue terms, their contribution to the overall industry. And so I think there may be slightly too much airtime being given to some niche commodities, when at the end of the day, it really does come back to the backbone of copper, and dare I say bulk commodities. Iron ore and coal are going to be part of the industry for decades to come, because something as simple as windmills are made of steel. And for steel, at least today, you need metallurgical coal and iron ore. And so those are the backbones of the industrialized economy.
Yep, the death of coal has been called far too early. So yeah, I agree. I think copper is, we've discussed it before, it's fundamental to the way of life that we lead, but it's going to become even more important as we go through this next phase of development. I was out in China a couple of months ago, and I was shocked at how far ahead they are in terms of their investment in the electrical grid and what they're doing in terms of developing for the future economies that they're going to face. And so it's really copper. Unfortunately, what's occurring in the other critical minerals is more driven by geopolitical issues and the concerns that China might be in too much of a dominant position. Okay, that's great. There'll be some more investment. At least it creates a little bit of focus on a sector that is unloved And if you look at the numbers relative to like, you know, the big seven or the magnificent seven or whatever the hell they're called, mining is a ridiculously small proportion. I think Nvidia's got a larger market cap than the whole of the mining industry put together. How is that possible when their business model cannot exist without us? So yeah, I think, you know, it's nice to see it changing. I don't think it's changed enormously across these niche commodities. Even lithium, it's growing. It's the fastest growing commodity sector, somebody told me, in history. But it's still a relatively small market relative to copper, relative to iron ore, relative to gold, of course. So I think it's the core group of commodities are the ones that we're focused on.
And I guess the question was really, people are talking about raw materials, but they still think mining's pretty stinky. Like, are investors
Not as much anymore.
Yeah, I think that's changing.
Yeah.
Yeah.
Not as much anymore.
discuss?
Yeah.
Well, so I'm from Canada. I'm based in Vancouver, and I think, you know, for the longest time there's been resistance to the mining sector. I think at large, oil and gas as well. But you know, I think thanks to Donald Trump, the conversation's changed a bit in Canada. I think people have woken up to the fact that we need to take control of our own destiny. And that includes taking and advancing strategic projects, which include mining, which include energy projects. And so I think that's become a little bit more well understood, and people are willing to accept that, you know, it's part of perhaps a grand bargain, where in order to have, you know, independence and a sustainable economic future as well, that this is going to be part of the equation. And the important thing is that it's done properly. And so, you know, we need to maintain our environmental standards in terms of progressing these projects. But I'm confident that in the Western world, we have pretty strong safeguards. And the key is actually making sure that they don't become red tape to advancing these important projects.
Yeah, agree 100%. I think, you know, 10 years ago in Australia, mining was definitely a dirty word. And I think, with the exception of coal, which is still very much on the, well, look, there is a very strong division in Australia right now between the people who recognise that coal is not dead and probably provides at least some portion of our energy mix for the next little while we work out how to get the best out of the, you know, the rest of the energy transition. Mining is no longer the dirty word it once was. I think people are suddenly starting to realise that these minerals that that we mine are fundamental to the quality of life that everyone enjoys. You can't have your mobile phone linked to the internet, storing your photos on the cloud without the mining industry. And I think that's suddenly come to the forefront of people's minds. It's interesting that the change in branding has been important. So we're no longer mining, we're critical minerals. So branding is, you know, we're doing a better job at branding ourselves appropriately.
In history, you've never actually transitioned from one energy source to another. You've always added additional sources on top. Is that the way you see it, or do you see fossil fuels getting phased out at some point?
I mean, I leave it to the experts, and there's some really well studied projections out there, and I think it's very clear that fossil fuels will continue to represent about 40% of the global energy baseload. And to your point, it's really about, well, consumption is going to continue to accelerate on a base case, and then if you layer in the AI data centers, then it's going to actually accelerate even faster. And so it's about how do you add incremental energy units. And you know, clearly there's tons of energy in terms of solar and wind. Really the challenge is around storage. And I think that's where the mining sector has an even bigger role to play in terms of unlocking the opportunity with energy storage.
Yeah, I think over history, it's shown that as development increases, your energy demand and your energy consumption goes up pretty significantly. So, you know, there's a lot of the world that don't exist in, you know, we're sitting here in London, beautiful rainy London. You know, they don't have the same infrastructure, they don't have the same quality of life, but they aspire to having it, and their energy consumption is only going to go up. Is it feasible to achieve any of the energy production that is required to have those people, you know, live a better quality of life without fossil fuels? I think the answer is absolutely no. The question is, how do we best mitigate that as we go through it, and you know, transition away from it in the fullness of time to something that's more sustainable? You know, uranium's probably got to play a mix in that. despite the fact that everyone seems to be concerned about it. I think we don't really know what technological advancements will occur in the next 20 to 50 years that may completely change the game in terms of energy storage. I think fossil fuels are not going to be phased out overnight, and the economies that believe that that is the case do so at their own peril. Australia being one example, which has the second highest energy prices in the world behind good old England, which is the only other country to have gone to net zero and phased out their coal-fired power plants.
How do you guys, when you got obviously a couple of established leaders and aspiring lifetime achievement award winners sitting in front of us, so how would you, when you look around the industry, how much of a problem is it, like being honest, how much of a problem is it where you kind of think we just haven't got the people and we've got the assets shared across too many companies to actually deliver on what the world needs?
I think the people are there, actually. I actually think the talent is there, but it's about taking that next leap. I think there are some fabulously talented up and coming, younger folks in the industry who have had rigorous training working for big organizations, whether they're in the finance sector or in the corporate sector. And I think they've got that devil on their shoulder that says, maybe I should give it a go. I think maybe I should step out from my comfortable job at BHP or Rio Tinto and have a go. But it's pretty hard to do that, I must say, especially, think about broader challenges in our day-to-day lives, and willing to forego the safety and the comfort of those jobs to go and take a swing is a hard thing to motivate for. So I think the people are there, but I think if there was a little bit more of a risk-taking culture, perhaps. I think, having spent most of my career working in London, which I think is, I think at the end of the day, historically, the epicenter of global finance, and with it, the mining sector, and moved to Vancouver, I think they're quite different cities when it comes to supporting entrepreneurialism, I must say. There's a little bit of, I can't put my finger on it, but the kind of West Coast air, perhaps, in BC, where I describe to people who are thinking about making a move out west as the Silicon Valley of the mining sector, because you've got a couple of the big established companies, the Googles or the Facebooks would be akin to a Tech or a Wheaton, large market cap companies, and then you've got a very vibrant, healthy mid cap, and then a fairly sizable junior sector, which is well supported, I must say, by some of the industry titans who are based out of the West Coast there. So it's quite encouraging for folks like me who've made that leap, for better or for worse, time will tell, about stepping out from the comfort zone and trying to have a go. I've been very encouraged by the collegiate atmosphere in Vancouver, who, a lot of the CEOs of these big companies have been very kind with their time and their support with Miranda Metals, our venture, in trying to make sure that it's a success. So I've been very appreciative of that. But it's tough, you gotta motivate yourself, especially if you've got young kids and a family, which often happens to be the case of people, in their 30s and 40s who are the next generation of leaders. So I think the people are there, but it's just trying to bridge that gap, trying to encourage them to step out and take a swing.
To take the jump, yeah, absolutely, because it is a very lonely place running a junior mining company with a development asset and going through this process with the expectations that come with it. It is, it's very different being inside a big business where there are a lot of places to hide and you don't necessarily have to take decisions. So I think there are, as you say, there's a new group of younger people coming through in our age bracket, in their late 30s, early 40s, who are looking to take the next step and looking to build businesses and things like that. But there's got to be encouragement from the investment community and from the leaders in the mining industry to go out and have a crack, frankly, because it is a very hard business to make money in, and it's a very hard business to be successful in. There's a lot of stuff that can go wrong. And when you're weighing that pressure up as a youngish person in the industry, we're not so young anymore. So.
Yeah, I thought that was a generous
youngish
label you gave us there.
It is a stressful time. The other issue has been, I've noticed it since I've been in the industry, is just the number of people who the cyclicality has gotten to them, and they're like, I just can't deal with this down cycle, up cycle. Maybe I make some money, maybe I don't, but the uncertainty kills me. And so quite a few of the smarter people that I know have decided that they'll just go do something else. I've stuck it out because I probably couldn't get a job doing something else, but you know, here we are.
Well, let's have a toast to the sector that we love. Cheers.
Do you guys mentor, and are you mentored, and is that something that you would like to do, or you already doing with like younger people coming through?
Yeah, I mean, I'm sure CK will agree with me on this. Some of the very senior statesmen in the industry are very generous with their time. If you are a young, hungry, and you show interest and you're ready, you make contact with them and you get out there. You know, there's some very big names in the mining industry that I've cold called and they've said, yeah, come and catch up with me and let's talk about things. And so my mentality on it is now if a young person drops me an email, we've now got an intern who's gone into a full-time role, who literally that's how he got a job with us. I was like, yeah, well done. That's, I really like your attitude. Just wants to be in the mining industry. We've got a new young guy working for us who's come out of Glencore, wants to get into the junior side of the mining, slightly higher risk, slightly higher reward. So yeah, I would love to be somebody like that in the future, but obviously, you've got to be somebody that people look up to. So that's a lot of work away for me until I get to that point.
Yeah, look, I think there are a lot of people in the mining sector who have a lot of scars from their previous experiences, and you only hear about the successes. But if you ask any of the people that I think Hayden and I look up to in our careers, they've probably had more failures than they've had successes. But we really celebrate the successes. So I personally have always tried to make an effort to learn from other people's experiences, and where possible, try to steer clear of some of those mistakes that maybe others have. Not been lucky enough to have that mentorship to dodge. Not to say that I've been totally successful in dodging, mines or tripwires here and there in my career, but I think, I am exceedingly grateful for the support that I've received from a number of folks in the industry, and I totally agree with Hayden. You'd be surprised if you just pick up the phone or drop an email, the level of receptivity from some of these people who are, they own sports teams, they're so wealthy, yet they're pretty generous with their time. So certainly, nothing ventured, nothing gained is definitely a sort of a motto in my approach in my career.
What's the sleeper in the industry? What's the problem, challenge that people aren't talking about?
Oh, that's a hard one.
It's a good question.
I had someone say water, or bring this up, like kind of going, that's what the next world war will be fought over.
I disagree. I think desal technology, there's CapEx. I mean, money can solve that problem.
Yeah, it's just the incentive price. I mean, you can create fresh water. Like most of the Earth's surface is covered in water. Water is not an issue. It's just the economics of creating fresh water.
So what is it then?
Well, I think it is access to capital and a willingness. It's an extraordinarily capital-intensive business, and nobody really wants to pay a price. Nobody wants to pay a high price for anything. If you think about, like, yeah, I want that, but I don't want to pay a high price for it. I want sustainable energy. I want solar and wind, but I don't want to pay top-notch prices for it. I want this thing, but I don't want to pay for it. I just want it given to me. I think people probably aren't willing to pay higher prices for commodities, which are required to get the capital to invest in the industry. I think that's the biggest issue, is finding capital to go out and explore, to take the risk for exploring, to build new mines. Look at the majors who are gun shy on these large copper projects that we think are going to be necessary. That's a capital decision driven by the underlying investors who are saying, we want a higher return. That's only going to be delivered if commodity prices go up.
Yeah, I guess the challenge has been a lot of investors have been scarred, right? And so they've got to live with those previous experiences, and I think that's where capital really crowds around a very select number of individuals and management teams where they know, okay, maybe I'm paying a little bit of a premium, but at the end of the day, I can sleep at night knowing I've entrusted my capital with these management teams. I think one of the big challenges is actually there's a real gap in terms of the haves and have-nots, and some of it is for good reason, but other situations are because companies are just too small. They're actually sitting on pretty high quality assets, and it's really hard to break out from, say, $100 million market cap to 500, 600, $1 billion, $2 billion, because it's really hard for the institutions, the investors you're talking about, Hayden, to actually buy into these stocks. There's a lack of liquidity. There's some real structural challenges, and at the risk of nerding out, I mean, if you go back to the Volcker rule where they've eliminated market making and prop desk ability to take positions for banks in stocks generally, a lot of the liquidity was sucked out of the system that would have otherwise been supporting some of these junior exploration companies that actually have good teams and have good assets. Maybe they need some support on the branding side of things with, well done video documentaries. But
do you know
they
anyone?
Can't break out. I know a guy. But it's really tough for them to break out. And you see it time and time again where these stocks that are trading in that kind of $100, $200 million market cap range eventually have a breakthrough. And you can kind of see it coming a mile away. And it's just when it hits that institutional inflection point where you can start to get that velocity.
Also the transition to passive investment money, where it's all market cap driven ETFs, where they are investing on the basis of what's your position in the index. And you're a $100 million market cap, you go out to raise money, they go, yeah, I'll have to own you, but my position is 500 grand. That doesn't help. One of the reasons we listed on the ASX was to find investors who could take an outsized risk position, because that's what's important for us at this period of time. It's been very challenging, and it's changed a lot in the last 10 years, raising money in North America in particular with the transition to passive, more ETF focused index money, basically.
Do investors give a shit about ESG?
It's still fundamental, because you can't have a business model in mining. You can't be a sustainable long-term business that's investable without a focus on ESG. Is it the same level of crap that we were dealing with previously? No, but it's nothing's changed in my view other than the marketing of it. The mining industry has always been focused on it. They know that their businesses require a focus on environmental and social aspects of managing their business in order to continue to operate. And so, yes, investors are concerned about it. Permitting, which is fundamentally ESG, is the biggest risk to new mining projects, in my view, getting into production. And so, yeah, the investors are still incredibly focused on it. It's not falling by the wayside. It's just not much of a marketing campaign.
Yeah, I think if you went back maybe 3 or 4 years ago, and you looked at the investor presentations of the issuers out there, everyone had their ESG slide, which used to be the last page of the presentation. Then it came forward to the first page of the presentation, and it would be tick boxes in certain buckets. I think that conversation was worthwhile. It was good to bring it into the conversation, but I think it's actually moved into a more practical, tangible conversation where it's really about responsible mining and actually really fundamentally about the communities in which you operate and the people you impact, and making sure that they're benefiting from our activities as much as our businesses, our shareholders will, and so that touches every aspect, whether it's employment, whether it's water issues. But I think it's much more localized. I think it's a little bit fanciful for a small high-grade gold company to talk about climate change. I mean, at the end of the day, it has really the square root of zero impact on climate change, and more localized to the immediate environment in which they operate, which is a good thing, I think.
How widely understood do you think that attitude is in the mining sector? Do you think these days it's endemic, or do you think if you went to an investor lunch for a 100 million market cap company somewhere in the West End, you'll just be hearing the same conversation as you were hearing 20 years ago?
I think it's management team to management team. There are some management teams who see it as an important part of their business, and others don't. And investors the same. There's some of them think it's an important risk for them to manage. I'd be surprised if there weren't a lot of investors now who are thinking that the ES in particular is an incredibly important part of any junior company that's trying to become a producer, but also any producer that's wanting to stay producing. You only have to look at the level of cost that occurs if you have a tailings facility failure. That can kill you. So
I'm not sure why Hayden pointed at me when he said tailings dam failure.
as you said to me earlier, that the only two things you don't want to have a problem with are resource and tailings storage.
Correct. Yeah, that's a
facilities.
nice way to curtail your career in the industry faster than you intended. I think those are key issues one needs to be on top of: geology and tailings management.
Yep.
Yeah, but to be clear,
You're on top of all of it.
precisely.
If you were talking to a student who was saying, I'd like to be involved in mining, what part of you says, go for it, great, and what part of you says, are you sure?
A mix of, so I'd be saying, if you like adventure and you like intellectual challenge and you like the ability to go and see the world and be in part of a industry which is fundamental to how we exist as a human race, then it's a fantastic place to be. If you want steady and stable and no ups and downs and no risk, it's probably not the place for you.
Yeah, what he said, exactly. I think it's a wonderful industry. I feel very lucky to be part of it. I think there's some great people in it as well. I think the opportunity to interact with such a wonderful spread of individuals around the world. I feel very fortunate about that. But it's definitely a little bit of a roller coaster. So you need to be able to, withstand challenges and bounce back. It's not going to be a straight line.
What are the traits that you need to have at your core to be a successful junior mining chief executive? Judith?
Well, I have not been one, unlike Hayden sitting next to me. I'm an aspiring one.
Well, you've seen a lot.
But I think I was very fortunate. So I started off my career in investment banking, where I spent the better part of 15 plus years. And right away from day one, the thing that I really loved about my job was I had a front row seat dealing with the CEOs, the CFOs, the chairs of companies big and small. And so within a couple of years of my career kicking off, I was in the room when decisions were being made about the future of a company. And then a year or two later, for I don't know what reason, they started asking me what I think and what my advice was. And so I did a little bit of a double take to make sure that they were actually asking me for my advice. But I think, look, you get exposed to amazing people, and I think there's some traits that you pick up along the way of, well, what she did was awesome. What he did, note to self, if I'm in that seat, I don't want to do that. And I think at the end of the day, the traits that I think are key traits of a junior mining CEO, and I would say Hayden embodies many of them. But you got to do what you're going to say. People want to see execution. So you got to manage expectations, and then you got to go and put your head down and actually deliver. Mining the market month to month, quarter to quarter will get you 6 months in, but actually to deliver for 4, 5, 10 plus years, you just got to put your head down and do the work. And sometimes you're doing it with an okay asset that you turn into something that drives value for shareholders. And let's be honest, sometimes you get lucky, and you got to use that luck wisely and make something of it. Better
luck in the smart. It's my career motto. I would say, no different to any other industry at the entrepreneurial end of things. Perseverance and the ability to stay the course and dig in when times are hard and make the most of when times are good are fundamental to continuing to move forward. I would also say sometimes you need to recognise when you're flogging a dead horse. There are some assets that are just not going to be mines in this cycle, and it's as a custodian of people's capital, investors' money, you need to be making a good decision and not just continuing on because it keeps paying you a salary. You've got to make a decision to not continuing to throw good money after bad on something that probably isn't going to work. Not everything's going to work. And I think most investors understand that the mining industry is relatively high risk. And so the two for me would be the ability to go, I love having a job and it's my security and everything, but I'm not going to invest any more of the investors' money in doing that because I don't think it's a return on capital. And then the ability to persevere when times get tough.
What's the most valuable lesson or the most valuable teaching that you've had from an individual in your careers?
I'll go back to, I think I was probably 2 years into my career. a overzealous, eager investment banker, trying to get into client meetings with my bosses. And I was sitting in a meeting with a major, and we were pitching profile after profile, hoping that they might take the bait on something. And the senior leader who we were presenting to said, "Guys, I don't care about MPV." And my brain nearly exploded because that's all I knew 2 years into my career. DCF model says value is X. He said, "I want to see what this looks like on a bull case price scenario, and I want to see what it looks like on a bear case price scenario, because at the end of the day, the one thing we always get wrong as a sector is predicting the price, the future price of the commodity." And so when you run a bear case, does it wash its face, or do you have to keep bad money after good, or does it wash its face? When you run a bull case, do you get all of your capital back, including what you invested to buy the thing, plus any capex you put into the ground? Do you get it back within 3 years? Because if you don't get it back within 3 years, which is the maximum a bull market lasts, historically speaking, then you're gonna have to wait a whole nother cycle to get your money back. And so we don't know when these cycles are gonna come, but when they do you get all your capital back in the first cycle of the bull market? And then is it a long life enough asset that it's got at least 3 or 4 cycles? So probably 6, 7 years per cycle, let's say. So is it a 15, 20 year mine life or more? And if so, then that's your excess return. You got all your capital back and you're waiting for the next cycle. So you've got to position yourself. And it opened my mind to the value of optionality, which I think is fundamental at the end of the day to making money in the sector, because you can't predict. You can have all the forecasts in the world, but we don't know when it's going to happen. Are you positioned, and do you have enough duration and exposure in terms of capturing value? So to me, that was an eye opener, that don't rely on the DCF model. You got to understand the building blocks of optionality around a resource project.
And Robert Friedland says we shouldn't even use a discounted cash flow. It should just be a cash flow. I would say that you learn a lot more from when things are difficult than when things are good. And we're in a cycle at the start of a commodity cycle, I think, where money is becoming more available. We're seeing it in terms of the amount of capital being raised for these niche projects that we were talking about earlier. Niche commodities that are not very big and not very well understood in terms of the value of those commodities, value in use at the end. What's the right price for these commodities? This is not a time to be learning how to manage a business. We've got to think back to when times were tough and we were careful with capital and making sure that we are spending money wisely to try and create value. And so that was a lesson from my old boss, the golden god, Mark Connolly. Very, very short arms, doesn't like to spend money, can't reach into his pocket, crime.
It's interesting, actually. I had the good fortune of being CFO of Lundin Gold previously, and we own the Fruta del Norte asset in Ecuador, which, for those who are familiar with it, 10 grams a ton, 500,000 ounces of production. But we had a motto, which is good grades make lazy miners. Yeah. And so how can we always, no matter how strong our cash flows are, how can we do things better each and every day?
I saw a really interesting thing about the purchase of Fruta del Norte. Going back to your DCF thing, it was an interview with the Lundin boys talking about the value of that asset. So this is
2014.
$20 billion company now?
Plus.
$22 billion company. When they bought it, it had a $500 million NPV against $1 billion capex.
Yep.
Says everything you need to know.
Life lessons that you've learned potentially the hard way.
Well, still currently learning it. Probably get a little bit too emotionally involved in the stories and the ups and downs that occur in the business. And so I try. My wife has a motto, which is, it's never as good as it seems, it's never as bad as it seems. Just keep going, solve the problems as they come up, keep chipping away at it. It's a long, long race, and you can't be making short-term decisions. That is an ongoing lesson that keeps getting learned.
Yeah, look, I think the lesson learned from my perspective would be there's no such thing as a safe seat. Going back to what we talked about, for the next generation of talent stepping into leadership roles, sitting back thinking, oh, my seat is safe. You got to come to work every day and you got to hustle and demonstrate, value add. And so I think pushing yourself, no matter how comfortable of a seat you might be in, there's someone who wants your job if you're in a strong position. So I think you gotta keep pushing every day, no matter how good you've got it.
Who's the best technical person you've ever worked with or been exposed to?
Ooh, which aspect of technical? Because obviously,
Three boots, yeah, whatever you
well,
want.
to find somebody who's really strong across all of the technical disciplines is pretty rare. So geologically, I mean, and also it depends then on the commodity as well. The Don Sergio Rivera is exceptional. He is really exceptional. Geology is an observational science. He is one of the best that I've ever worked with. Certainly, in terms of Chile and copper, there's nobody really that I've met that's comparable. On the mining side, again, there have been loads of people, but all in different commodities and things. The person who's probably got the best technical understanding end to end, probably the great Martin Horgan, who's not here. He should be here, but he would be certainly up there. Look, I'd say there's nobody who I've come across who has detailed technical knowledge of every aspect of business, but I would argue that in a senior leadership role, it's better to not be too focused on one technical area, because when the going gets tough, you see it all the time, you naturally defer back to the thing that you're most comfortable with at the detriment of all the other things that you need to focus on. And so I think the best leaders that I've worked with have been people who have a command of all of the areas, but are never really they go to where the attention is needed most, and they work their way through it, and they spend their time trying to understand it. So those are the best leaders that I've worked with.
Yeah, I would agree with Hayden's comments. I think at the end of the day, it all comes back to the rocks and the geology. And I think, we've worked with lots of different geologists in our careers, and some of them have very specific experience. I think the ones who have the breadth of experience, who understand, Latin American, African, Eastern European, and they've seen a lot of rocks at the end of the day, but importantly, they're also able to make a risk decision. I think it's very easy to run a due diligence and come up with 100 reasons why not to proceed. Yeah. And I think the folks, and they're very rare, the folks who can see risk, but also understand ways to problem solve around it and think about the opportunity constructively, are worth their weight in gold. And I maybe my memory's a little hazy, so I can't go back over the whole career time span, but there's someone who I've dealt with recently who I would actually point out, I think it comes from that geological background, but has that breadth of experience, and it's Mike Armitage, who was the chairman of SRK. And I think he's someone who I think takes a very pragmatic approach, but also is willing to call it. To your point, sometimes it's just you're hoping for the best, and it's not there, and you got to be able to make a difficult decision. And equally, sometimes it might be there, and you take a risk approach. So I would say, hats off to Mike. Enjoyed working with him.
What's the most common mistake that you see in the mining industry that causes project failure?
Technically?
Anything.
Gosh.
I mean, capital is, at the end of the day, I think the big hurdle. I think there's a lot of projects which will lead to their natural course because they're just not very good projects. People try, and with the best will in the world, sometimes you can't fight hundreds of millions of years of geology, and it is what it is, and maybe it's for another cycle in the future. But there are projects which probably have, not advanced because. And this was frankly one of the reasons I got really excited about getting into mining as a corporate finance person was you can see, okay, from point of discovery to point of production, it can be 20 plus years, and actually making sure that you create per share value for your investors, which people forget about. It's nice to have a big market cap, but if you've blown your brains out with equity issuances along the way, you haven't generated any value. So how can you navigate, zig and zag your way through the value curve while protecting value per share? So I think the management teams that have managed to execute on that over an extended period of time, not surprisingly, are the ones that have made money for their investors, and not surprisingly are the ones that more investors want to back, and success begets success.
Oh God, it's so hard. I mean, there are
Give us your top 15.
top 15.
David Letterman.
So, first one is over-promise, under-deliver. Is like probably the worst thing that occurs in the mining industry. Is we say that this is what it's going to be, and then it doesn't end up being what we thought it was going to be. That's kind of part of the need to attract capital, and so people have got to go in with the mindset of, these are hard businesses to make money in. Too aggressive capital structure. When you go into the build process, is, as we're about to do with Marimaca, being too aggressive on a capital structure as a single asset, no cash flow developer will almost certainly spell some sort of issues at some point in the future, unless you're extraordinarily lucky. I mean, everybody sees things like Fortescue, but people forget that Andrew Forrest took an incredibly aggressive capital structure, which almost sunk the company. Like it was pretty close to going one way or the other. Now he's been a success, and everyone's like, I can do that. Well, don't underestimate the amount that luck plays into it. I think underestimating timelines to deliver things. I mean, there are just so many things that can go wrong in the industry, which is why I say, it's a very difficult place to make money and to be successful. And so we've got to be relatively conservative and, try to manage those risks as best we can and be open and honest with shareholders that, we recognise the risks and it's hard to make money.
Are investors seduced by transparency though?
I find that they are, yeah. I've found that, it's much better for me to go out with an open book. These are the things that I'm concerned about. Here's what I think is good. At the end of the day, I'm a custodian of their capital. I would prefer to have the hard conversation about whether or not they think that the project's good or bad before it gets to the point where it is good or bad. And so I think it is, yeah, I think absolutely, being transparent. We're thinking about now, how do we talk about what we're doing in terms of the construction process that we go through? Do we become extraordinarily open and transparent in that everything that's positive or negative that comes out of it is going to be reported, and we're just constantly updating the market and letting them know if we're behind or if we're over budget or whatever it is. And I think that's the right way to go.
Yeah, and don't forget, a lot of these fund managers have bosses and investment committees to report to, and so it's important that we as industry leadership are transparent with them, so they can be transparent with their stakeholders. Because it's a shame if they get put in a difficult spot because of poor communication from mining industry leadership, and then that institution as a whole decides, we're done with mining for now. So I think transparency is key.
I'm Anthony Maliski from the Oregon Group, and we spend a lot of time thinking about commodities, writing about commodities, and investing in commodity companies. And one of the questions that we often contemplate or ask is, how does a junior company with a market cap of 10 million, 50 million, 100 million, 300 million build a mine, advance a project with a $2 billion capex? You need equity, you need debt, you need a royalty and a stream. And, what is it that you're going to do, and what is it you're going to do to be taken serious and to advance enough that, you can get to a place where you can actually build it? Or is it just a reality that, you can only take these projects so far, and then you have to either bring in a partner or sell?
Yeah, they don't believe that you're able to take the risk. And I think that's perfectly reasonable for the capital markets to say, we're without a major, and this is part of the issue with the copper industry and why I think we're in a really interesting cycle over the next 5 to 10 years, is most of the copper projects, development stage copper projects, need a sponsor in the form of a major mining company in order to move forward through the next phase of development. There are periods of the cycle where big multi-billion dollar projects can be financed. We're not at that stage yet, and maybe we will be in the near future. But I do think that some of the more entrenched management teams with these assets that are actually pretty good on paper and would probably do quite well in the hands of a larger company may need to take a more pragmatic view in terms of value creation for their shareholders. It's a very challenging thing. Most management teams don't see the market as telling them that your strategy is not believable when your market cap is way below your capex. They just say, I'm undervalued. Well, the market's telling you something. So you either change your strategy or you find an alternative to continue to move the project forward. You can't sit still, you can't mind the market, but unfortunately that's what quite a few people in the industry do.
Like, I don't think there's a shortage of capital. I think there's a huge amount of capital that wants to go to work in the mining sector right now. You look at, there's over $15 billion sitting in the mining-focused private equity universe. You look at the dry powder amongst the streamers, it's probably another $15-20 billion if they needed to, could deploy readily. And then that's before you get into the sovereign checkbook, when you think about the amount of capital that wants to go to work there. So I think there's just a wave of capital that's sitting there. But the challenge is, to your point, Hayden, is sponsorship. And I think for some of these juniors who have great projects with big CapEx numbers ahead of them, is the concern that they're going to run out of money, right? And so they're not able to keep moving the project forward. I think once you've got a strong long-term shareholder, you see it there, whether it's a family office, whether it's a strategic, whether it's an institution that people know will stay the course, will keep writing checks, and you take that kind of that fear factor out of the story that this is going to keep going forward. And ultimately, also, I think the management team's acknowledging that if we're honest with ourselves, we don't have the balance sheet to eventually put this into production, but we can de-risk it for an eventual major or mid-cap who has the balance sheet to unlock it. I think it's doable. I think it can be managed, but surprise, surprise, a lot of it comes back to capital and being savvy with bringing in the right support groups as a sponsor, particularly.